Hello, welcome to Time2Talk, Time2Market's energy trading podcast, where we break down the latest developments with trading experts and industry leaders. Hi, welcome all. Welcome to Time2Talk, the podcast from Time2Market, where we invite industry experts to talk about the developments in the energy markets. And today we have here with us Fanos from SmartestEnergy. Welcome, Fanos.
Well, thanks for having me.
Of course, happy to have you. How are you doing today?
I'm good today. I'm good. But thankfully, the frosty London weather's getting a little bit milder, so it's a bit more comfortable playing football in the evenings when we should all be getting to sleep instead.
Nice. Very, very important. Life is getting a bit better again. Hey, Fanos, tell me, who are you? What are you doing at Smartest? How did you arrive at Smartest? Can you just walk us through?
I'm someone who decided that they were going to be an investigative journalist and seek justice around the world. And so I studied economics and politics and decided that's the journey I was going to go on. So I guess that's kind of my motivation. That's the kind of person I am. But I discovered the energy industry just by chance, really. After university, I got a job in a news agency called Dow Jones, and I'd be publishing to a wire. My focus was energy fixtures. And that's pretty much where I picked up the knowledge around energy trading. This was very early in the stages of the traded markets. I think the electricity pool was still in operation in the UK back then. My main claim to fame there is I did get to publish at some stage. I managed to get an article of fixtures in the Wall Street Journal. So I think that's kind of the start of it. But the good thing is it put me central to the infancy of the UK and European traded markets. So I got to meet some great characters who, I remember calling people on the ski slopes in Geneva from TXU who were saying, "Oh, I forgot to send you my trades today. Let me just call my analyst to send them to you." So I used to collate everybody's trades and then create indices. And it was very, very, crude the way it was done. But effectively, I'd get visibility of everyone's trades. And I describe it as the Wild West of energy trading in Europe, but it was actually great fun, great personalities to meet, but it was a very, very kind of different outlook to what we see today. It was pre the Enron collapse and the accounting rule changes. But at the same time, I did witness that whole Enron and post-Enron kind of market environment. Great learning experience. And at the same time, I was still focused on publishing price indexes, grabbing water levels in the Rhine and the Danube and publishing that to a newswire, and started learning how these things were relevant to energy fundamentals in Europe.
And how did you make the jump, so to say, from the journalism side to actually being more front office? Because that's where you are now, correct?
Yeah. Again, that was a very, I'd say, a prolonged journey. But the first step was to go work for one of those American majors, and Duke Energy were the first to give me a chance. I actually went there for a role to learn from the very kind of beginning, settlements and trade control type role. And they kind of, in that interview, they realized that I probably had a capability in doing a market risk role. And that was really where I kind of got my real understanding of risk and risk management. I was producing P&Ls for FX positions, coal, oil, gas and power. I was very, very fortunate to be surrounded by some really amazing people, great talent. The vulnerability was all there. I didn't know what I was supposed to know, and these guys really did help me out. They educated me, but gave me good opportunities, and it's through work that I think I learned the most rather than my kind of academic grounding. But Duke Energy was a risk role. It was a short-lived role because no sooner had I joined and we were rolling out an ETRM platform. So ETRM pain was day one of my risk management career. And that's good. It built resilience because ETRM pain is something that stays with you forever if you are in energy trading. And it's implementation, it's extension of projects, upgrades, but you will always be, you have to build resilience to those kind of projects. But at Duke Energy was short-lived, 2 years. We were rolling out, expanding, and then within 2 years, other American partners were withdrawing from European markets, and Duke Energy's investments were being scaled back. They weren't very successful in acquiring assets across Europe, so they decided to retract back to core business, and so they were just getting things back in place in Charlotte and Houston. And so whilst it was a very, let's say, negative start to my career where it felt as though you were being discarded, being made redundant, that kind of thing, it was a great learning experience because, I literally had to stick around and understand what a negotiation of portfolios and novations and sell-off portfolio looked like. And I was just short of switching off the lights when I was leaving that company. And I still think of it fondly as a fond experience.
You mentioned there the risk management to make the link a bit more to your role right now. You learned really the crucial basics of risk management. There being on the risk side, now being in front office.
Yep.
Can you just walk us through shortly what is the most important measures when you look at your risk management? You have your portfolio of positions. How do you approach risk? How do you make sure that you generate P&L, that your drawdowns are not too large, that risk is happy with you? How do you tackle that?
Well, look, the first thing is that the discipline, the governance that you create collectively as a leadership team, as a company, that should shape your behavior, your culture around risk and risk appetite. That's the first thing. Now, there's two sides to it. I can give you the academic, the science kind of answer there, which is saying that, there's best practice. You need to follow it. You need to have, by committee, you agree what your risk appetite is, what your limits should be and how they should be operated. But at the same time, you want to allow people that creativity and that freedom to pivot in and out of positions, and also articulate where there is real risk and where your governance doesn't recognize that a risk is not manageable in the same way that a textbook might articulate it. For example, utilities and suppliers in particular have a shape risk exposure. This is something that you can use standard metrics and that would skew their limits and that would force them to enter into positions that actually compound their risk rather than reduce it. And so you have to identify some of those risks and warehouse them differently and report them differently. There's that side of it, but when you're a risk analyst just starting out, there's also the other side of it where you're trying to ask questions, probe the position and the trader, and you have to really learn a level of resilience and focus because some of the characters you work with aren't always working in the most standard of way. And I can tell you now that the look of a trading desk back then is very different to what we have now. In terms of diversity, I would say that we had a very homogenous look in most trading desks at the beginning of my career. And I think the behavior was very much focused in one way that you wouldn't really find acceptable today. And it made a risk analyst job very difficult to communicate, to learn, to collaborate. And so I do like today, we have much more progress to do in terms of diversity in the workforce, but that's certainly something that I felt was a challenge as well. It wasn't just the academic side, it's also the interpersonal side.
Yeah, it might even be the most important part with your team, of course.
Yeah, I mean, these things are important in what kind of culture you want in your company, in your team. And also for me, I came out of my long stint with EDF. I haven't touched on that, but the next phase of my career was at EDF. And again, it was a place of safe learning. It was a long time there, and I managed to transition from middle office to front office there. And again, it was a a risk analyst role, then moving into a position management role where I'd be supporting traders, but in a real-time reporting role rather than a day after role. And so that gave me that different sense of focus and stakeholder management, until eventually I got onto a shift desk, so I was able to trade real time within day, start talking to power stations, understanding what all the different problems, engineering problems they have, and how they're restricting my position. Again, these are the steps that I needed to go through to get much more confidence in what I was trading and what positions and views I was taking. And so my journey's been very slow, very tedious, very long, but that's because I really had a real thirst for that practical and working knowledge of all the detail. So that 3-year stint on a shift desk, I would say at the time were the most rewarding and fulfilling from a work perspective. That's when I started coming into my own and really enjoying my job and the market. And I couldn't see myself doing any other job until a customer facing role in trading forwards came up. And I did that very reluctantly. I thought I'd enjoy it, but I wasn't sure. I didn't want to give up my 24-hour shift trading role because of the strategies that we were pursuing there, the assets that we were flexing. No, again, it turned out to be a very good move, and it gave me access to both commercial facing roles, but also start trading on the forward curves. And again, it was via an intermediary, but I really did enjoy that period of my career as well.
So there you did have the best of both worlds. You had still client contact at the forefront with all the customers, and also trading positions of the clients further out in the curve.
Yeah, so I pretty much acted as a market access route for a lot of our large commercial and industrial customers, built good relationships with them and their consultants. And we would often have them coming in on site, and we'd be discussing basic kind of market features and characteristics. And I transitioned from a world where questions were around vertically integrated companies in the UK. The belief that ownership of assets as well as customer supply businesses meant that they could dominate pricing and dominate liquidity, and that forced the market to regulate itself with things like mandatory market making, where we were obliged to put two ways out, and two ways is something that the financial regulator would frown upon. But these are the things that I worked through, and there were exciting times, but it really did change behaviors and the way market worked. And I constantly had to be that interface that educated customers about this. And some customers had a real thirst for this knowledge, and other customers were finance directors who had long kind of boring days, and then they'd call me and say, I want to trade today, and just be a bit of escapism for them. But I still would have to treat them fairly, treat them, openly and transparently, to say, this is what's going on today, this is what you need or what you'd like to do, and I can get this for you. And it was enjoyable, very enjoyable time.
So we have now a nice build up towards your role towards Smartest. I realize as we speak that the people listening today might not know Smartest at all, or only limited. So can you walk us through who is Smartest and what do they do? And then afterwards we can look, of course, further into your current role within Smartest.
Yeah. So it took me around 15 to 17 years of being in this career to then map out specifically the culture and the people and the features of a company that I would like. And, I would say the closest feeling the closest view of a company is something that looks, acts and feels like a startup or a tech firm, but actually has got enough foundations to be able to back their innovation or back any of their ideas financially and level up where possible. And SmartestEnergy, at the time when I met, and when I say I met them, I didn't meet people in a job interview. We had colleagues, ex-colleagues, or people that I'd just met through the industry, and we had a real kind of similar outset and similar kind of approach to entrepreneurial initiatives. And I'd say that resonated throughout SmartestEnergy at the time, and we still do today. But it's a very difficult thing to scale up because we've grown significantly since 2018 when I joined. But at the time, 2017, 2018, I had a very clear vision of the kind of people I wanted to work with, who I wanted around the table with me, and the kind of behaviors and culture that company should espouse. And Smartest really did tick all those boxes. And by then they were about 16 years old, I think, the company. But yeah, it really did tick all the boxes. However, I was on a little bit of a hiatus in my career. I was working in a very small accounting practice. I say small, it's medium sized. And I was doing everything from making sure the fridge was full of milk to consultancies on HR and IT procurement contracts. But yeah, I guess what I was trying to say there is to say I was on a little bit of a break, and significant approaches were made from Smartest, and everyone I met along that road could sense my apprehension of coming back into the industry, but they really were sincere and genuine. And a lot of those people are still around, and I still really enjoy working with them, for them. And I think that's who Smartest are. They're very people driven, very people led. And that's how we try to build our business portfolio as well. And I think I don't know if I've told you enough about who Smartest are, but basically, independent generation is what our focus was at the time. We started by giving access to market to those independent investors and generators. And it's what people now call PPAs, or they might call, a green net zero journey or whatever it is. But we had a niche, and our niche was trying to find generation and give those independent producers access to market pricing and market services. And we were always willing to structure those contracts, and that grew into a supply business as well. And we're still doing that today. We've grown significantly, but we're always looking to make sure that we're a trading company first and foremost, but providing that trading access and market access to our partners.
Thank you, Fanos. I think that will give most of the people a good idea of what Smartest does. You mentioned the portfolio, Smartest portfolio, all the partners, the clients that you have. Without giving too much details, can you give us a sense of the portfolio? Is there a typical client? Do you aim for small? Do you aim for large? Is there a very high spread naturally? What is it that you're after?
Yeah, so we have some niche products that really serve our multi-site, multi-tenant portfolios. So we've got some very large industrial and commercial customers who manage complex real estate portfolios, for example, where they've got multi-changing kind of tenancies and everything going on there. And in some cases, they need fine granularity to the products that they're doing, but they have a collective way of managing it. So a lot of our partners will call them funds. And a lot of the consultants that represent customers manage their own funds as well. So we replicate that behavior, and we do give people access to a fund management type facility. This means that they can sign up to us on a supply deal without a tariff, and they can hedge with us at any point in the future, subject to their contract, in any level of granularity, right down to 0.01 megawatts for a baseload product. And I think these kind of fine-tuning opportunities enable people to manage complex portfolios of customers. And while we've got customers who then manage funds of customers, they appreciate that service. We've got other customers who come directly to us, and they just have a very vast real estate footprint, and they just need the ability to segment some of their accounting. And again, they're willing to always set up, portfolio 1, 2, and 3 hedge fund with accelerated risk appetite or decelerated risk appetite. So there's all these flexible approaches to hedging that customers come to us with, and we immediately flip and try and accommodate that and create the facility.
When you look at creating the facility to do that, you offer a platform for your parties, your clients to do hedging. How much are you of a platform, and how much are you of a guidance, a support, a consultant towards your clients?
Yep. So we're firing on all cylinders. We have online platforms for real-time pricing. Our interface still remains recorded conversations to trade, but we do have an online trading platform as well, which a lot of our direct or generators appreciate. But most people who are watching markets day in, day out and trading, no matter how much we try and provide platforms, self-serve platforms, they want to speak to us. They want to get on the phone. They want to chat to us, and they want to record that trade on the phone. And as long as that's there, we're not going to scale back our resource. We're going to maintain that strategy, which gives multiple touch points to our customers, because that's our job. It's market access in all forms. It's information, it's knowledge, it's sharing what we think might be happening, or we can't give price predictions, we can't forecast, but when they call us and say, why is TTF doing what it's doing, we can only say what we've seen. We can't always have the facts, but this is what's going on right now. But these are the kind of things we enjoy doing and customers enjoy, and a lot of them are very, very excited by markets and volatility, and they want to have that touch point.
Basically, most of your clients want to be a trader in some way as well and sit behind these buttons.
Most of my clients, it feels like everyone wants to do this. It's fun. I can't lie. I've really enjoyed the time that I've been doing it. The only sadness I have is that moving into leadership, I don't get to do it as much.
You win some, you lose some, right?
Yeah, yeah.
You made it sound pretty easy. Like, you have your platform, you have your clients, you offer great service, you have a great personal connection with your clients. But at the same time, offering such a platform in a robust way makes you basically a tech company with very advanced platforms. Can you tell us a bit more about that? How does the development of such a platform look like? How much does it take to maintain it? How crucial is the platform in your whole value chain?
So yeah, it's very difficult because you're constantly having to review whether you're building internally or whether you're licensing platforms. And we've got to be ready to call it a day and switch it off and replace. So these are all the difficult challenges, and you're constantly in flight on that. And there's two ways that we're gauging that. We're looking at engagement on our platforms, but we're also looking at our review of it, customers' review of it, and then we get a lot of customer feedback as well to say that they've seen something or they enjoy working on something else. So we're constantly speaking not just to our existing partners, but to potential new partners to see what's out there, what can be better, what can serve us better. But we're also, very reluctant to make that investment decision too soon. And we've also got to be ready to decide when we're going to pull it and move on to something else. And that one's the harder one, I would say, because once something's deep rooted, you've got it there. But the continuity in all of these decisions is around our talent and our people. And I'd say that for me is the biggest challenge. It's maintaining the right talent in the right places, keeping them motivated, keeping them in their growth journeys, because we are a growth company, and a lot of the people within the company, a lot of our leaders have grown with the company as well. And that story has to maintain. And as you become a very large, mature company, those growth opportunities sometimes flatten out if people like me don't keep moving on. So I think I'm always conscious of that. I don't ever want to hold back talent because they're good at what they do today. If they're young and they're on a growth journey, they deserve the opportunity to keep growing, and I prefer for them to grow here with us. And so I think that's where we are really in a good place. Going beyond our core business, what I've described to you as our core business is what we've really focused on. Our strategy has been to expand our model, to expand our flexibility and real open model to let customers trade as much or as little as they want, and be as complex as they want or as simple as they want. We want to take that to Spain, to Portugal, to Holland, to Germany. And we have obviously started that journey quite successfully with your help as well. And we're continuing that iteration. And I think that's the main thing, is to just keep growing that model. And we're growing it by starting off by just taking on proprietary risk in some of those areas. So even if I don't have a customer base, I'm still going to be able to trade all of those markets I've mentioned, and that's growth opportunities for talent, but also I hope I can attract talent who really want to work with us in the right culture and the culture that I'm espousing here, and get them to look at my Iberian book, my German book, my interconnector positions, all of that. You know, this is the exciting journey for us, and that's the main challenge I've got. I'm hoping that's the way that I'm going to attract, retain, and grow talent.
How do you start in a new market taking proprietary risk? Because you are, of course, very, very familiar with the UK market, you know the ins and outs. But these new markets, even though they're very much connected, of course, all the power gas relations, the interconnectors, making all the markets very correlated, of course. But how do you start a new market?
Yeah, so well, first of all, I've got a lot of challenges internally. I've got to convince my shareholder, I've got to convince my peers that it's worth it. It's worth investing this money to not just to chase growth in profits, growth in our business model, but also to protect our core business. And no example is better than what went on during the energy crisis years. At the beginning of the conflict in Europe, and the spiking in energy prices, a lot of our competitors couldn't maintain their lines. They couldn't maintain their trading lines for customers. They had to withhold all their credit lines, their capital, for their own needs, for their own uses, to hedge their own portfolio. Now we're not asset heavy. We don't have that exposure. So our capability needs to maintain access and service for our customers. So that was the first thing. We had to really double down and make sure all of our capital was available, our credit lines were live and open, and that we could hedge when our customers wanted to trade. The other thing was that there was no UK power market during those days. You could say there were some prices out there, but you could have put your finger in the air and said, "Oh, pick that price today." And the difference between the bid and the offer were not reflective of where we felt the market was valued. But our ability to trade outside of the UK at that time enabled us to continue to warehouse risk and provide a service to our customers. In fact, so many of our customers who have other suppliers relationships as well would call us and say, "So and so refused to trade with us today. I like that price on screen. I want to buy it. Will you sell it to me?" And I would say, "I can, but they're not going to sleeve it for you because they need that credit line for them. But if you were my customer, I'd sell it to you straight away." And for the customers of theirs that I was serving, we were able to meet their needs. And we had a glowing reference at a time when people were on their knees and the prices were high. And we weren't enjoying that period because it was a very difficult time for our customers. And it was a very long time before the government came out and gave them assurances on their price caps. But I guess what I'm trying to say is that lived example really helped our expansion case to demonstrate to our bosses that we were able to stay in the game, to maintain service when others were pulling back and saying, "We're no longer going to supply this portfolio of customers." We were able to take on more of those customers and warehouse some of that risk because we could trade correlated markets.
So basically the whole energy crisis, the madness of things, which has been profitable for some and horrible for others, has shown Smartest that having access to other foreign markets offers great opportunity when you have a team of great people who are ready to think outside the box and take proxy hedges, new exposure to be able to serve your clients and onboard new clients.
Yeah. And there comes a time where the frustration of clients because you're not willing to serve them will become it does easily go viral, and it does affect your ability to attract new customers. And so we need to maintain a footprint globally that enables us to serve all of their needs where possible. And the journey is not just around power and gas. Our renewables activities, our certificates trading is truly global, and that takes us beyond our core supply customers, because there are customers who may come to us for their electricity supply and then leave 3 years later and then come back 2 years after that. That's the nature of the market. But they maintain those lines with us. They're constantly speaking to our renewables trading desk, and we're mobilized to provide them with all of those assets, as well as any emissions allowances that they starting to. A lot of industries are being brought into scope, and they coming to us as a point of reference and a trading point for that.
One of the questions I like to ask to the visitors here as well is challenges, and I'm looking here at 3 points for you personally, for you as Smartest, but also for us as an industry.
So my business model relies heavily on the talent, and I'd say the challenges are, first of all, everybody's got in on this now. Banks have started reopening. I was there when banks retracted from power trading and just wanted to focus their exchange positions on gas. And I'm now there when they've all sniffed a bit of profit from the volatility years and the crisis years, and decide that they're gonna open a desk for a year or two and see how that goes. And they're just drawing all the talent in. And they're good at growing talent, but at the same time, when you're opening a brand new desk, you're going to lift the desk from elsewhere. And we've had senior traders go to competitors or companies that decided to expand their trading operations. Historically, we're quite risk averse, and now have decided they're going to open a spec desk. A lot of our counterparts are doing that. They, historically risk averse organizations are now saying, well, we'll have our generation desk, but we'll also want a spec desk. And so what that means is that my high achievers are constantly being tapped up, and that's fair enough. But I've also got a finite pool of talent that I'm picking from as well. So we're all doing this merry-go-round of talent, and this is a global phenomenon, not just London or Europe. And we've been disrupted quite a lot here. A lot of we've seen a flow of talent onto the continent since Brexit. We've become a less appealing place for all that talent that I used to love working around when I was in central London. And it's a good thing that there are still people who are happy to come here and live here. But I've got a bit of bureaucracy around that. But the other challenge I've got is to broaden that pool of talent, to make it a lot more diverse, to make it a lot more reflective. I work in neighbouring Newham borough, and my trade floor doesn't look like the Tower Hamlets that I'm within. So I'd like to be able to really be disruptive in that area as well, and create opportunities for people to learn, for people to grow, and for it to not look like me.
I can say also from our side, we see these parties entering as well, of course, and we set some of these parties up, and they are looking for people and skilled people, and they have budget. And your challenge is, I think, also then directly a challenge for Smartest, but I dare to say also for the industry. There's just so many new participants coming to the market who want to be a part of the volatility in case things go crazy again, we get price spikes. And it drives the salaries up, it drives the bonuses up, it increases competition, and it's even harder to find the right people for the right job. So you are not alone there, Fanos.
Yeah, and I'm always open for talking to people and identifying if we've got the right mindset. These things are more important, because we can all compete and we can all throw money at the situation, but in the end, people do want to be in a safe place, a psychologically safe place. They want to be in a place where you enjoy talking to each other, and I can tell you for sure, here in London, I can tell that we're being forced to come back into the office a lot, because my train's a lot busier than I was used to it this time last year. I want people to be coming into my trading floor every day, not because I'm mandating them, because they want to be here, because they want to interact with each other. And that's what I value the most, is just that pool of talent to really be around each other and feed off each other.
Yeah, people who realize that if they're compensated fairly, that it's more important to have a great team of great people around you that you enjoy working with, rather than a higher pay slip. Good, Fanos. I would like to thank you for today. I think we have had a great chat about you, Smartest, and the industry. We want to thank you for showing up, for joining us, for having a great chat. here with Time to Talk. And of course, we look forward in the cooperation together with you, bring Smartest to new markets successfully, and give that extra push, extra support to grow your business.
Paul, thank you so much. Thanks for having me, for inviting me. I'm honored to be on this amongst the many esteemed guests I've seen on your blog. I think I don't make the cut, but I'm still happy that you were willing to have me on.
We were very happy to have you on, Fanos. So thank you for joining. Have a great day, and let's rumble.